You're with us here on Ask Udayan, the show where we take all your stock market related queries and specifically take a look at strategy during volatile times. The numbers coming up on your screen. Do send in your queries and we'll take a select few every week, answered by our global business editor, Udayan Mukherjee. So our first viewer query today then, let's kickstart that conversation. Our first query today from Gopinath Deshpande in Navi Mumbai, and he's got a question around Nykaa. Let's listen in.
Hello Udayan. Taken Nykaa stocks about 4 months back and accumulated 60 shares at an average price of 1600 rupees. Today it is about 1400 rupees. Should I hold this stock or accumulate more or exit from these stocks? Please advise.
Well, among the digital companies, I think Nykaa is about the best you can buy in the listed universe right now. I mean, it's a very good franchise in the beauty and personal care segment. Of course, the stock has corrected very significantly from its all-time high of 2400, but that's in keeping with the rest of the digital space. You're losing about 10-12% from your purchase price as well. Nykaa has flirted with 1200, 1250 in the past, but always found a way to bounce back. But if the global correction, particularly in the Nasdaq, were to deepen, is there any guarantee that Nykaa will also not go down to triple digits, which is below 1000 rupees? I don't know for sure, because there is no great valuation support for any of these companies, including Nykaa. Nykaa is good, it's profitable, but to value it on a PE multiple basis, I think even today the stock is trading at some 500 PE multiple. So, I mean, that is ridiculous. So, there is no metric with which you can value and say this is the price at which it has become very, very attractive. While volumes are growing very briskly in the BPC segment, Nykaa's EBITDA margins actually are no more than 6-7%. So at some point, the brands that they own themselves and don't trade, which is basically owned by other brands, their owned brands are today about 10-11% of their overall sales, and their margins are higher. So when we see much higher contribution to sales coming from their owned brands, that is when the profitability metrics will increase, and we might be get to a position where we can value Nykaa successfully on some kind of a profitability metric. Till then, you keep your fingers crossed and hope that the pedigree of the management and the quality of the franchise will ensure that the stock does not see very sharp downgrades even from here on. But hand on heart, I cannot say that if the global turmoil in the Nasdaq particularly were to intensify, you will not find Nykaa at even 1000 rupees a share. It's quite possible. So be prepared for a volatile ride. You might choose to average at lower levels, but I don't think it's the kind of stock where you will get a lot of sleep at night with.
All right, we've got a query coming in from Kerala on Oil India. Let's listen in.
Hello, Mr. Udayan. Good evening. I have 300 plus stocks for Oil India and at the rate of 254 per share. Kindly advise me whether should I keep it or sell it off.
Well, it's difficult to say whether this is the exact right moment to be selling that company, but I'll tell you what I think about Oil India and other upstream PSU companies. In my book, they should not be part of the investable universe of any long-term investor. I mean, you saw what happened a few weeks ago with the windfall tax, and in one day, such a great percentage of the market cap of ONGC and Oil India was wiped off because of a decision taken by the government. And this is the sword which will always hang over the heads of some of these public sector oil companies. So in my book, there is just no point in talking about earnings per share growth, volume growth, P multiples, dividend yield on a company where overnight its fortunes can change because of some decision taken by the promoter of the company. So with that risk in mind, I would suggest that these are not companies which will create wealth for you over the longer term. They should not be in your investable horizon. And if you get a good exit price because of some reason like a jump in the price of crude or something like that, I think you're better off looking at other companies. I would not be advocating or recommending that you hold on to these kind of names. This is not a recommendation to sell that stock today. I cannot do that. I'm not a stockbroker. But I would hesitate to say that these are great long-term investments for any investor's portfolio.
All right, D.V. Srinivasa Rao has written in from Chennai. Let's listen in. I think his query is on Amara Raja.
I have 300 shares of Amar Raja batteries bought at the rate of 925 rupees. Shall I average now or book loss or wait and watch?
It's going to be very painful, sir, to book a loss at this kind of level, because you've lost so much of your purchase price, and of course the stock has corrected because of all the problems that you're well aware of. I mean, there has been a significant problem with Amara Raja batteries on the OEM front, which is the for the new vehicles from manufacturers directly, because autos have been in such a lull over the last couple of years that there has been no great pickup on the OEM front, and that's been hurting Amara Raja batteries quite significantly. And the other is, of course, the raw material prices, which have gone up significantly, and they have put considerable pressure on the margins of the company. So on both fronts, from a OEM volume point of view and from a margin point of view, they have got squeezed, which is the reason why the stock has done so badly. It's actually not a bad management. It's a kind of a leader in the battery space. And I think both the problems which have led to the undoing of the stock might actually be closer to the bottom than you think, because I think the raw material prices are now slowly beginning to level out, and therefore you will find that margins will stabilize, I hope, from next quarter onwards. And even the OEM problem, because companies were not seeing enough demand, auto companies, or they were stuck with semiconductor chip problems, those are beginning to address themselves, and I think it is just a matter of time before the OEM demand starts to pick up. So I think you're probably going through the worst time for Amara Raja batteries and towards the end of the pain for that company. To sell at this point in time, you might regret later on. So I would say, if you've been patient all this while, it might make sense to hold on to a stock which is trading at historically low valuations of 10 and 11 PE. I've never seen Amara Raja trade at this kind of valuation. I'm not saying the stock will rebound immediately, but if my guess is right that the autos will slowly start to turn around, then I think you will get much better prices in Amara Raja over the next 6 to 12 months. So this is my guess, my hope, that Amara Raja probably is closer to the end of its painful period, and maybe even closer to bottom in its stock price. So I would be reluctant to say that you should take such a big or book such a big loss on your purchase price.
All right, that's all the time we have on this edition of Ask Udayan. Thanks so much for joining us, and do stay tuned as we'll take more of your queries next week here on the show.
If you like the video, do like, comment, share and subscribe.